Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZJLD interim report. ZJLD Group Inc. offers a variety of businesses and services including production and sale of Beiju products, sales through distribution partners, sales through store partners, direct sales force, online store sales, brand management under Zhenjiu, Lidu, Xiangjiao, Kaikuzio, Xiaoyang, and other brands. The significant increase in ZJLD Group Inc.'s stock price over the past year can be attributed to several key factors. A notable surge of nearly 10% on August 12, 2025, was driven by institutional perspectives that policy changes were accelerating industry consolidation and expectations for improved performance in the second half of the year. The introduction of new products such as Dazhen also boosted investor confidence. Additionally, positive sentiment around new product launches and anticipated industry recovery have likely contributed to the stock price increase. ZJLD Group's reputation was further enhanced by recognition at various awards ceremonies, including the Greater Bay Area listed companies E's Gone 100 Green Advancement Awards Value Champion Award, and 2 honors at the HKMA's 2024 Best Annual Reports Awards. However, it is the strategic product developments and positive outlook for the Beiju market that appear to be the most direct drivers of the substantial stock price increase. The primary drivers of revenue growth for a company can be attributed to several key factors. The introduction of new product series, such as the Zhen 50 series and Dazhen, has contributed significantly to revenue growth. Additionally, synergistic positioning with existing products and continuous value creation mechanisms have also played a crucial role. The launch of premium and deluxe sauce aroma Beiju products, including the Longjiang series, has been another major driver of revenue growth. The introduction of new products such as Lidu Sorghum 1965 and Xiangjiao King series has also contributed to revenue growth. Furthermore, the company's strong distribution channels, safeguarded distributor profitability, and multi-channel sales network have all contributed to revenue growth. Awards and recognition, such as the gold medal from the Spirit Selection by Concours Mondial de Bruxelles in 2023, have also had a positive impact on revenue. On the other hand, the primary drivers of revenue decline include weakened consumption demand, direct expenses incurred by reportable segments, and decreased gross profit from Xiangjiao and Kaikuzio. The increase in revenue contribution of low-end products and decrease in gross profit margin of deluxe price range products have also contributed to revenue decline. Overall, the company's revenue growth is driven by a combination of new product launches, strong distribution channels, and awards recognition, while revenue decline is primarily due to weakened consumption demand and decreased gross profit. Net income and profit margins overview. The net income of Zhenjiu decreased by 45.6% in 2025, while Lidu's net income declined by 9.8%. However, the company's overall net income increased by 11.6% due to higher net foreign exchange gains. On the other hand, profit margins showed mixed results. The gross profit margin rose from 58.8% to 59%, but channel and distributor profit margins contracted in 2025. Despite this, profitability improved due to digital transformation, operational efficiency enhancements, and strategic business model innovation. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the total borrowings have increased substantially from RMB 510.2 million to RMB 630.4 million, indicating a rise in financial obligations. Additionally, non-current liabilities have also seen an increase, albeit at a slower rate compared to the previous year. Conversely, cash and cash equivalents have decreased, suggesting that the company may be struggling with liquidity. Regarding interest expenses, there is a mixed picture. While finance costs, interest expenses, increased to RMB 14 million, they actually decreased by 10,976 in another instance. However, one notable trend is the significant increase of plus 320.6% in interest expenses from RMB 3281 to RMB 13,957, indicating a substantial rise in financial burden due to debt servicing costs. The financial performance of various segments in 2025 compared to 2024 reveals a mixed picture. On the positive side, Kaiku and others segments showed improvement, with revenue increases of $1,111,512 and $1,695,985 respectively. However, their gross profits decreased by -$730,559 and -$954,398 respectively. On the other hand, four segments performed poorly: Zhenjiu, Lidu, Xiangjiao, and Zhao. These segments experienced revenue decreases of $63,381, $175,262, $143,045, and $43,511 respectively, along with corresponding gross profit declines. Management is emphasizing the company's focus on maintaining a strong liquidity position, indicating a cautious approach to financial management. They also plan to fund future capital expenditures using available resources, suggesting a conservative strategy for growth. Additionally, the company aims to reduce its environmental footprint by promoting water recycling and reducing freshwater withdrawal intensity. Furthermore, they are committed to corporate social responsibility through donations and employee volunteerism. Overall, the company's outlook prioritizes financial prudence and sustainability. The company's financial summary reveals that it has engaged in two key shareholder return strategies. Firstly, the company has a history of paying dividends to its shareholders, as evidenced by references on pages 61, 62, and 81. Secondly, the company has also implemented share buybacks, with documentation found on page 80. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals several red flags regarding inventory buildup and supply chain disruption. On page 16, an extensive base liquor inventory stored raises concerns about potential overstocking. Furthermore, channel stuffing, page 18, and a decrease in retailers and distributors from 2024 to 2025 indicate a disrupted supply chain. Regular on-site inspections and monitoring of inventory levels are implemented as mitigating measures, pages 22-31. However, these efforts may not be enough to address the underlying issues. The decline in high-end Beiju product revenue due to reduced business banquet activities and strategic deceleration of certain deluxe products, page 32, also suggests a supply chain disruption. Overall, the company's financial summary highlights concerns about inventory buildup and supply chain disruption, which may impact its operations and revenue. That concludes the financial summary for ZJLD. Feel free to comment below, and I will be happy to answer them when possible.